Headlines versus facts, the real numbers. Let's take a look at what's happening in the Hoboken real estate market and give you some actionable takeaways of what this means for you in your scenario. Hey guys, this is Jeff Bonk from the HBB Group here in Hoboken, and we have the blessed opportunity to work with hundreds of Hoboken buyers, sellers, renters, and landlords every year, and it really gives us the ability to look inside the market, take a look at the numbers, and be able to give that to you in a nice package to help you figure out what is the best decision you could be making for real estate at this exact time. Right now, we're going to take a look at what happened in May versus April, and take a look at if the market really slowed down like so many headlines are telling us, and what's happening with interest rates and the economy, inflation, if that's really having an impact day to day here in Hoboken. First, we'll look at sales, then we'll look at rentals, and we'll take a look at what that really means for you given your scenario as a buyer, seller, renter, or landlord today. First, we'll take a look at sales and how many new listings came on the market versus how many went under contract. Now, under contracts fell. We're down 10%, from around 100 to around 90 places went under contract. But what's even more important is that the active listings that came on the market fell by about 20%. So we have a supply and demand issue that's even out matching the inflation, economy, all the different things that we see in the headlines. If there's simply more demand than there is supply, we're gonna see prices and days on market and things like that stabilize. Now, because of this interest rate situation that we're looking at today, where rates are up 2.5% in the last 60, 90 days, less people are willing to move now if they've just locked in a 3% rate. So we're seeing less inventory hit the market. If you were thinking about moving, not really sure if you wanted to, now maybe I'm less inclined to do so. I'm gonna stay in my place a little bit longer. And that's what we're seeing from a lot of would-be sellers in Hoboken, which is making the inventory hitting the market actually decrease faster than buyers are decreasing their speed looking at properties. So right now we saw days on market stay flat. 12 days on market in April, 12 days on market in May as the average days on market. And we're also seeing the offer price versus the asking price is still about 1% higher on the offer side. So if you're asking $1 million, you're getting about $1,001,000, right? So we're seeing that ratio stay the same. We're not seeing it decrease. We're not seeing demand decrease. We're not seeing days on market really go higher. What we are seeing though, there's the insights behind the numbers. We're seeing a little less offers come in. So let's say 2 months ago, you were looking at 2 or 3 offers. Maybe today you're only looking at 1. Maybe it took you, the first weekend to get it sold. Maybe now it's the second weekend with 1 solid buyer rather than 2 or 3 coming in all at once. So things are changing a little bit. We're seeing a little bit of dynamic of people taking their time a little bit, being a little more cautious, maybe less demand depth, right? There's not as many people ready behind the buyer. We're still seeing great numbers. We're still seeing great days on market. So what does this mean if you're a seller? What does this mean if you're a buyer? If you're a buyer in today's market, you can be a little bit more cautious and you can be a little bit more careful with the offers that you're making. You don't have to come in right at asking, maybe right over asking right out of the gate. Some places, yes, you'll definitely need to. The best places that come on the market, turnkey, ready to go, priced well, will still get asking or better, but the only one buyer may be willing to do that. So if that buyer is not there that weekend, you might have the ability to negotiate a little bit, take your time a little bit, but don't take too long, because what we're seeing is there's a ton of people looking, but a few less offers coming in. Right? So that tells us that there's future interest, and there's some buyers that are just trying to figure out their spots, maybe getting their finance readjusted since the interest rates changed, and they'll probably be back in the marketplace summer, fall, whenever that time is. If you're a seller, what does that mean? Relax. It's gonna be okay. If it doesn't sell in the first weekend, if it doesn't sell with 5 offers, we're still seeing really, really good offer to asking price ratios. We're seeing really, really good days on the market, and there's a good amount of buyers doing their diligence right now, reassessing their budgets. If you were at 1.5, maybe you're at 1.3 now. If you're at 1.3, you're at 1 million, but everyone taking a little bit of time to move down and figure out where they need to be now financially. They didn't stop buying. And the reason for that is because the rental market, where we're going to talk about right now, is ridiculous. A lot of times when interest rates go up, a would-be buyer says, I can't afford what I want anymore, I'm going to go rent. Well, rents are up, off the charts numbers. We're talking 10, 15, 20, 25, 30% year over year, depending on 1 beds, 2 beds, 3 beds. It's a little bit of a different number, but it's crazy. We're seeing 5, 6, upwards of 15 applications come in on a new listing that hits the market. We're seeing asking prices of $3,000 when we think that might be an expensive number and get 36. We're seeing asking price of 55 and getting 6,000. So if you're a buyer and you're thinking about flipping to renting and you see that, you might just reassess the numbers that you're willing to pay to buy. All predictions still look good. We still have all the major economists out there, Fannie Mae, Freddie Mac, all talking about, yes, possible recessions, but not affecting real estate, most likely. We're talking about interest rates probably flattening out here, maybe even coming back down into an election cycle. Who knows if that's gonna happen? We don't have crystal balls, but we do know like a lot of the different dynamics that are pointing towards making a strong argument for that being the case. So if you're a renter, take a look at buying maybe, or just stay where you are. If your landlord's willing to renew you, if your landlord's willing to do a modest price increase, don't be so trigger happy to that first sign of a increase in rent, go find something else, because I'm telling you, it is difficult out there. It is not an easy market to be a renter in. You can find a new place, sure, there's definitely places coming on the market, but it's gonna be competitive. You better be ready, you better be fast, and be willing to pay a premium, honestly. If you're a landlord, enjoy one of the nicest landlord markets you've ever seen and probably ever will see. You can do a modest increase on your rent when you do find new tenants, or on tenants that are already in your place are willing and they understand they got a COVID discount maybe last year around this time when there was way less demand. But if you're a landlord, talk to us, talk to your realtor, make sure you know what the pricing is and decide if it's worth renewing that tenant. If the tenant's been great, awesome, give them that discount, let them stay in place. And if they do decide to leave, know that there's no issues filling that place, and probably for a really good number. So the market's dynamic, the market's changing all the time. I'm making this video a week or so into June, right? After the numbers are all in from July, from May. Things have changed just today. Interest rates are up again, things are happening differently. So it's a dynamic market, it's an ever-changing, quickly changing market. So if you need anything, guys, feel free to reach out to us. Our team of agents is ready, prepared to help you figure out what the next best thing for you is. We always say, don't try to time the market for the market's sake, time the market for what you need as a family, as an individual, as an investor, and let the time in the market really be the value of letting appreciation over long term take care of you. But make the right decision. Maybe you need to rent for a couple more years if you're not certain on where you're going. So it's not a one size fits all. It's not always the right time to buy, always right time to sell. It's important for you to know what's the specifics that apply to your situation. So if you want to talk that out, reach out anytime. We're always here. Have a great month, and we'll see you with one of these in July.